Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Hey, Jim, and thanks as always for having me.
Tim, is there a story about gold and reinflation?
Absolutely. As you know, we have been, or I have been looking for, or thinking that gold was pressing into a 9-year cycle top, and it's tried several times. It hasn't bitten, it hasn't bitten, it hasn't bitten. It'll get close, and then it just, it moves on, and it just hasn't happened. I think the perception is that gold's advance here is inflationary. And, I think that from, my read of the way people may be thinking is well, it's because of all the Fed's money printing and the reinflation. But that's not really reality. It's not inflationary. If you look at, the underlying, inflationary indicators, if you will, if you look at commodities, I mean, they're broken. The structure's broken. If you look at interest rates, they're declining. But yet the Fed is, that's one of the tools they have is their mouth, and, they've been talking about how they're going to push inflation above the 2% threshold and all this kind of stuff, and they're not going to intervene, they're not going to raise rates, and they're going to keep rates low. Well, the reality there is that they're not going to raise rates because rates are declining, and the market dictates that, not them. We've discussed that. That's another misconception, I think. And so what they're trying to do is create the illusion of a reinflation here. But the deflationary forces are enormous. And that's what these interest rates are telling us. If this was inflationary, we'd be seeing interest rates rising rather than falling. If this was inflationary, we wouldn't see the longer-term structure with commodities broken. The rise in gold is just simply not inflationary. And if you look at gold, look at what it did in 2008. It went down with equities. Look what it did in 2015 and 2018 when we moved into those cycle lows in equities, those 4-year cycle lows in equities. It went down. And look what it did in March when we had the decline. It went down. And so I think that we're setting up for, everything to move down together, but understanding where we are in the cycles and the relationships are key.
Can the Fed reverse the natural cycles that gold and silver go through?
No, but they can extend them. The Fed can't negate a cycle, but they have certainly successfully manipulated and extended and postponed. But the cycles, what they do, if you look, one perfect example of this, if you look back at 2000, coming out of the 2002 low, that's when they really started getting aggressive and pushing the envelope, if you will, with the intervention, manipulation, call it what it is. And they press that cycle and press that cycle and press that cycle. Look what they did to commodities. Look what they did to oil. Look what happened with, everything, housing, everything. They blew us up into, call it what it is. It was a bubble, nothing compared to this one. But then it was multifaceted. It was their efforts and the perception of their efforts that created that environment. And yes, while on the one hand they were successful, quite successful, obviously, at extending the cycle, they just stretched the rubber band, and when it snapped, and the result was the worst financial crisis since the Great Depression. Well, we've seen that on steroids here. And, like I said, I hate the saying, but the can just keeps getting kicked down the road. They fixed nothing other than to extend the cycles once again. We had that crack into March, an initial break, and, they came out and did their thing and jawbone the market and that sort of thing. And now here we sit once again with the illusion, an illusionary pause. I think we talked about that. I used that term last summer when things were trying to set up, that it was an illusionary pause, that we were somewhere that we weren't, and then, the setup came and it cracked. And I think that's the environment that we're in here again. It's an illusionary pause. Well, yeah, things have held, and gold is moved to an all-time high, but I'm telling you, it's not what it appears. This is an enormous trap.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, the latest employment numbers in the U.S., encouraging, not encouraging? What's the story?
Well, there were some numbers released today. I don't remember what they were. I heard, but I don't remember. I did look at some of the Fed data, the continuous claims. Yes, they're down a little bit, but, they're still, I'm looking at a chart of it here, it's still at the highest levels by far going back to the inception of that data, pre-1970. And then, initial claims, no matter how you look at it, yes, it's down a little bit, but it's still at the highest levels going back, prior to 1970. And then if you look at the unemployment rate itself, it's at the highest level going back. This goes back to, I don't know the exact date, but it's 1950-ish or just before. And so, how do you reinflate on the back of an economy like that? And then, not to digress back, but you look at interest rates. I don't know if people are even aware or if you're aware, but last year we talked about, particularly going into November, coming out of November and December is when I talked about that illusionary pause and what was going on and how we had come through this particular setup and looking at the yield curve and so forth, and how interest rates have started to decline as equities pushed into that final high. Well, we're seeing the same sort of thing here. This entire advance since the June low, we've seen interest rates continue to decline. And last couple of days, the 3 and the 5 year have actually moved below their March, April, May lows. And so again, that's another sign of underlying economic conditions that we're not reinflating. Now, these counter trend bounces, what we've seen with equities is we've got this ginormous non-confirmation, if you will, where some things have moved to new highs, the NASDAQ and some of the high-flying stocks. But we have this non-confirmation with all the other indexes that have not. And so that is a warning rather than a sign that things are great. And so what I'm saying is on the one hand, you look at it and you say, oh, well, the NASDAQ's at a new high, but then the proper way to look at it, in my opinion, is that it's not being confirmed by anything else. It's a non-confirmation. You look at, the high-flying, gold. Yes, it's moved to a new high. Absolutely. and as this cycle has extended. But then all the other things we've looked at and talked about where you have these underlying non-confirmations, those are warnings. And then when you look at, what we're seeing with interest rates, when you look at the structure of commodities as a whole, yes, they've bounced, absolutely, obviously. Oil is back over, or was, I don't know where it's trading right now, but, right around that $40 mark. And so it's bounced out of the lows we saw earlier this year. Everything has been in these counter-trend bounces, and they're setting up for the second act. Are we there yet? Well, no, but we're getting close, or I think well, let me say that another way. When you move through or into a cyclical juncture, where you have some cycle tops due and that sort of thing, then those are opportunities. It's like going through a rail yard, then the track can be switched. Is it? I don't know. But it's the opportunity as we move through these technical junctures with these cycles that are coming due at these turn points, then it's an opportunity for all those things to set up. Whether it's at this juncture or the next cyclical juncture, I don't know. We're going to have to see once we see what develops as we move through the juncture, what structure falls in place. So it goes back to my statement earlier. The structure is key. Structure. Just like when it pushed into the top back in February, we were waiting on the structure. We saw it. Bada bing, bada boom. There it was, and we got the result we were looking for. Same thing here. Counter-trend bounces. We go through these cyclical junctures, understanding the cyclical phasing and so forth allows us to know when we're in that environment, and then looking at the structure will allow us to know if something more is going on or if it's just a minor decline, and it's going to continue till we get to the next opportunity. I think ultimately, like I said, there is no signs of reinflation here in spite of how it's being spun. So I think it's a thin ice scenario.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, the U.S. Fed says it won't hike interest rates at least until the end of the year. Also, they're going to continue their emergency loan program until then. What's that going to do to the markets?
Well, I don't know that it matters. I mean, if we get this set up, I guess it comes down to at some point they're going to lose. Trying to choose my words. I guess the only way to say it is they're, for lack of better words, they're going to lose their effectiveness or control. And is this the point? I don't know. We have to see what the structure holds. But as far as them raising rates, of course they're not, because like I said, I've done studies. It's a proven fact that they actually follow the short-term rates. Now they can influence them, absolutely, but ultimately they follow. And a perfect example of that is go back to 2018 when they started raising, and then the market said, no, you're not. And then they changed. They did their about face. And so going back into the 40s, it's a well-documented fact. The market forces them to do what they do with rates. So that is more of the jawboning. That's more of the painting the illusion of the ultimate control, which, like I said, that in and of itself is a tool, because if I tell you something and you believe it, then I have this illusionary tool, and I think they're using that in trying to manipulate the market into believing that they have control of that, when in reality, like I said, it's just the market. But I digress. I don't think it matters. I mean, the market's going to do what it's going to do until it sets up, or until their effectiveness wanes. And I think we're getting, like I said, into another juncture to where they're going to be tested once again.
Talking about inflation, maybe a factor that hasn't been drawn up in any kind of equation, but a friend was pointing out now when you go for a haircut, they charge you more because they have fewer customers. They have to have social distancing between chairs. If you get your nails done, half the chairs are closed, so they're charging you more. Is that going to lead to inflation?
Well, I guess that's another type of inflation, but that's not the inflation I'm talking about. Of course, I mean, things are going up. I mean, you go to the grocery store, things cost more. Absolutely. I mean, the inflation I'm talking about is looking at raw materials data, interest rate data, and it's economic inflation. It's not there. Yes, there's inflation in areas like that. I mean, your health insurance costs, the insurance premiums in general, automobile. I mean, yes, obviously, but that's not exactly what I'm talking about. No.
I mean, I'm just looking at my own condo fees are going up $60 a month to pay for insurance, and people are being told in the building have special anti-flooding measures put around your toilets, bathtubs, and dishwashers because water claims apparently are the biggest thing. This whole insurance thing, is this a problem in the U.S. as well, where strata councils are being told you have to pay for the floods and fires somewhere else in the world?
You know, I don't know what's driving the insurance cost all the way, but I know this. Insurance is, in general, a scam like everything else in life. If I know that when they have the hurricanes, they say, oh, well, it's not, people have a problem with the water. They say, oh, well, it's not the hurricane, it's the winds. And there's a word for that, but I can't repeat it on the air. But there's a scam for that. and I don't know. I mean, it's just the world we live in today of passing the buck, and like I said, there's a word that really sums it up nicely, but I probably shouldn't use it on the air.
Tim, how would you sum up what's happening on the markets right now?
I think it is a big, fat, illusionary. I say illusionary. It's real in the sense it's real because obviously prices have levitated, but it's just that. It's a levitation. Everything, the higher degree structure with equities, commodities, and so forth is broken. But we've got these counter trend bounces. And intertwined in those counter trend bounces, when the Fed came out and did their thing, everybody thinks it, like I said, that it's inflationary, and it's clearly not. Or re-inflationary, I guess maybe a better way to say it, and it's clearly not. The deflationary forces are definitely at play. And we have this, I don't know how to even describe it. I mean, look at our economy, man. I mean, I drive down the road, I see new businesses closed. I drive by, there's the even the gym, they don't have the traffic they have. I mean, everything is off. And so we have this, what I think is this Hope-ium rally, if you will, coming out of this initial leg down. I think that commodities and equities and everything is pushing into counter trend tops, and in the case of, like I said, the stuff that moved to new highs into their 4-year cycle tops, and that everything is ultimately setting up for the next wave down, for the Act 2, however you want to describe it. And I think it's going to take all asset classes with it. And no one sees this. No one, I mean, that's the danger of this. And yet you have all the cheerleading and telling people that everything is fine, and every talking head, every politician are telling us that we're reinflating, sales are great. I heard some talk. I'll leave the names out who said it, but I heard some talk saying that retail sales were at all-time highs. Well, I looked at some retail sales numbers. It's complete bullshit. I mean, really? And so, no, it's a train wreck. But again, we have to have the structure fall in place, and so that's the key, and that's what we're watching for.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.